What up guys, it's Pete here and I got a very special video for you today. This is my first official investment video and I'm spilling all of my best advice. Now you may be thinking, from a content strategy perspective, this guy's crazy. And you may be right, but I'm the kind of guy that eats dessert first and has no regrets. So today I'm sharing the most underrated company on the stock market that is bound for future success and is relatively unknown for the average investor. Also, stick around until the very end where I give a little sneak peek of my all-time favorite investment for the next investing video. Now, my videos are all about helping you win in all areas of your life, whether it's personal finance or helping you travel around the world to broaden your horizons. If you like that sort of thing, be sure to check out my other videos and join me on this adventure. Now, let's get started. See, the one thing about me is that I'm a value investor, and my whole portfolio is centered around dividend yielding companies that have a long-term growth outlook, sustainable business model, and competent leadership. And in this video, I'm not really going to be throwing a lot of jargon at you to make it sound like I'm a genius, but what I'm rather going to do is explain the business and why it's a great investment. So without further ado, I'd love to introduce B. Riley Financial. If there's one niche in the market that is able to maximize their expansion during this pandemic, it's the companies that really cash out on the retail apocalypse. And now we're in the middle of the damn retail apocalypse, and we're almost at DEFCON 1. Now, there's a laundry list of companies that were already dying, and now the pandemic just accelerated that. Now, B. Riley is a financial services company that was started in 1973 by the namesake Bryant Riley, who is still the chairman and CEO to this day. We'll touch upon that later. Now, they provide a diverse range of services to corporations, high net worth individuals, and this includes specialized investment banking and asset management. But here's the best part. Auctioning and liquidation of retail spaces is 35% of their segmented income, and that's growing very quickly as a result of the pandemic. And it's growing as a large chunk of their profitability. Now, what this means is that this company could be a pure play solely on store closings in that retail apocalypse. And this obviously excites me very much. I want to focus on the retail liquidation business for a second, or their business unit called the Great American Group. Now, this is the same group that liquidated Toys R Us and many Payless shoe stores. This is what they specialize in, and their business is actively growing, as is, and they have a huge name recognition in that niche. And they're bringing on new clients almost every single week, including Steinmart's, which just announced they're closing all of their stores on the West Coast, and B. Riley is handling that. And now, this isn't the only way that they profit off of distressed businesses. They also provide loans, forensic accounting, and also restructuring advice. And what this also typically includes is that B. Riley, or the Great American Group, receives stake in that company when they do that. So when they're helping out that distressed business and they bring it back up on their feet, that increases the value of the business and the shares that B. Riley purchased, which is an incredibly smart business model. Why do I like this company so much? This is a very unique company with a diversified business, and it's not like any other financial institution, so it's not subject to so many financial regulations, and this is especially important when companies try and do a lot of mergers and acquisitions. And B. Riley thrives off of mergers and acquisitions and acquiring a lot of assets from either those distressed businesses or just adding on new business units to their company. And in around 2014, they acquired the Great American Group and had somewhat of a merger, and that's what makes them so unique. B. Riley stock is ridiculously underrated and undervalued as far as the stock price is concerned. Now, currently, they're trading at $26 a share with a 5% quarterly dividend. And that's incredibly attractive for a long-term investor that's looking to build up their portfolio. Now, I have 3 main reasons why I'm bullish on this stock today and why this is a timely investment. The first reason is this is still a small cap company with a market cap of around $600 million. And although that may sound like a lot, compared to other big financial institutions that are worth upwards of $35 billion, $250 billion, and compared to Apple, Amazon, they're over $1 trillion. So this is relatively a small cap company with a long-term growth horizon for 30, 40, 50 years. And the stock price will most certainly appreciate. And now that's one good reason why I'm very bullish in the long term. It's also important to note that these shares have generated around 51% return over the past 5 years. And when you factor in the stock market rout of March up until now, the B. Riley stock has over a 90% return over the past 5 years since they had their IPO in 2015. And this ridiculously outperforms the S&P 500 for the same time frame. So they're already outperforming. So that kind of leads into number 2. Insider buying and selling is one of the best ways that anybody can measure the health of a company, because if insiders are buying the company, they're clearly very optimistic about the future if they put their own money into the company like that. If they're selling, it means, hey, maybe they're trimming their position. Maybe the company's losing their competitive edge. So it's important to note that. But the reason I'm very, very bullish on this stock is chairman and founder Bryant Riley spent $1.2 million of his own money over the past week and a half buying B. Riley shares. And now since March, since the crash of March, he has invested millions and millions of dollars. And he already owns around 30% of the company. And now he's drastically increasing his position now. That's incredible. And to put this in perspective, the March lows were around $12 to $14 per share. And the trading price right now is around $26. So even though the price has rose from $12 to $26, over 100% in the value, he's still very bullish at this price. And this kind of coincides with the third reason on why I'm very bullish: share buybacks. Now, because B. Riley is not subject to the heavy federal regulations as the banks are, they did not have to suspend share buybacks. So this July, they spent almost $20 million buying back 900,000 shares of common stock for an average price of $22. Financially, they are very healthy, and the share buybacks only increase the price of the stock just a little bit, but overall, it increases the price and shows that momentum. B. Riley is a wonderful company, and before I made any investments, I thoroughly researched them. I looked at their financials, their company background, and their leadership's perspective on several issues, including the retail apocalypse, investment banking, and their broad outlook for the future. And that's very important to know that they're thinking on the same wavelength as you, and they have a good head on their shoulders, because that's really important when making any investment. And the one thing about the retail apocalypse, though, that people are really going to question ethically is, why should I buy in and bank on these companies going out of business? Well, it's actually part of the business cycle, and it's really healthy. And I wrote an article about this on LinkedIn a few months ago. I'll link it in the description below. But what the basis of it said is that these companies that don't choose to evolve, they decay. Look at JCPenney, Brooks Brothers. They never went into e-commerce, or they were really bad at it. And so they naturally died off. And that's a great thing for the economy, so that other companies can get in their place that are consumer focused. And my biggest thing is you have to diversify your portfolio, even within that same industry. So, for example, within financial services, I have a lot of Bank of America, JP Morgan, and companies like that that are in the financial services industry but cover different aspects of it. So B. Riley is not my only holding, don't worry, I diversify. Now, I know this is my first video, and y'all are gonna cut me a little bit of slack for all the kinks that I'm working out, but please, let me know what topics you want to hear more from, and any feedback so I can improve how I make these analysis videos. But now I'll give you a little sneak peek into my all-time favorite company, BLNK Charging. If you're bullish on the EV electric vehicle industry, this is the company that I really like, and it rides right off the tailwinds of Tesla. When they go down, when Tesla takes a 30% dive, they don't take that dive with them. Oh no, they go up. It's based on the whole industry. They ride the tailwinds up, but not down. So, stay tuned for the next video. Pete, signing off.